Well, hello, everyone. I'm Kerry Wood, the CEO of the Sacramento Region Community Foundation, and I'm joined today by Michael Miller, who is the Chief Investment Officer at Crucial Partners LLP. So, welcome, Mike.
Thank you, Kerry. Good to be here with you.
I'm going to tell you a little bit about Crucial and our relationship, and then we're going to launch into some questions. Crucial Partners is an independent investment advisory firm that provides customized investment advice to nonprofit institutions, and it's been around since 1980. So there's a lot of experience that Crucial brings and that Mike brings to the foundation. So we've worked with Crucial since 2007, and we have several priorities that we look to achieve with our investments. And one is protecting the corpus of the foundation's philanthropic assets, preserving the spending power of the income from our charitable funds to maximize the dollars that can be put to work in our community, and maintaining a diversified portfolio of assets to meet investment objectives. So, our goal with the time we have together today is to share with our fund holders and friends of the foundation your insights on the market and our approach to our investment strategies. So, if it's all right with you, let's get started.
Sounds great, Kerry. Thank you.
First question we want to pose to you is what's been the state of the market this past year and how has it impacted the foundation's portfolio?
Well, it's markets are funny things. I've been at Crucial now for 36 years, 37 years, maybe it is almost 38 years. Oh my gosh, I can't count. So it's been a long time. And one of the things you've learned over the years is just how markets are always in a state that seems very unstable. It's always moving around. So we saw, for example, at the end of 2022 or during 2022, some really, really difficult market and climate issues and returns. And those were a function of a changing world that we live in. And I think the way the world is changing is very much affecting markets as it should. And to be more specific, we have higher inflation, as many people unfortunately are suffering from. We have higher interest rates as a result of higher inflation. And that creates a very different type of market climate than the one we've been living in. And then you add on some of the geopolitical challenges out there in the world, and you end up with a very complex climate. But the good thing is that markets have a way of being very complicated and very difficult to predict. And so one of the things you can rely on, although it's not perfect, is that when markets are struggling, that they will get better, and when they're doing really well, they'll get worse. So in 2023, to get to your question, Kerry, markets did kind of what they sort of usually do, which is they decide, wait a second, maybe it's not as bad as it looked in 2022, even though all the things I mentioned are, obviously still here. They haven't really changed for the better in any material way. And markets did really, really well last year. And they've actually started off this year in a fairly 2024 in fairly good standing as well. So returns have been really strong. The only thing I would add, we'll talk about this, I'm sure, later about the foundation strategies, is the markets have been very focused on a very small number of companies that have really led the way, the so-called Magnificent Seven. And so that's something that's very interesting in terms of you think about as an investor and think about achieving the objectives that you set forth earlier, which is really the thing we all think about at the community foundation.
Absolutely. And that's why we're really glad you're on our side. Curious, since you're talking about earnings, can you share like an overview of the 2023 earnings? And then if you had a crystal ball, what would you project would be 2024 outlook?
Yeah, so 2023 was a very satisfying year. So the longer term portfolio pools at the foundation, the endowment and the long term portfolio were up more than 16% last year, which is a really, really strong outcome. So we're really, really pleased about that. Because different fund holders have different philanthropic time horizons and different needs for distributions, the foundation also offers pools with shorter horizons, and those predictably did not as well, but also did well. So there's an intermediate term pool that earned over 10% last year, and there's two shorter term pools that earned just under 5% last year, which is one of those. I mentioned earlier, higher inflation, higher interest rates. We're earning 5% plus on cash right now, which is certainly one of the changes people really can tangibly see in their lives right now. So the earnings were really strong last year. 2024 is going to be interesting. Obviously, I think I read the other day that something like 60% of the world's population will be electing new leaders this year. So that's a lot of potential political change. And politics are a complicated topic, of course, and a very important one. And so that's going to affect markets. But I will say, I think the fact that the U.S. economy has really frankly. I love the idea that we don't make predictions because we don't bother spending our time on things we really don't know what will happen. So we're not surprised that the U.S. economy did well because we had no expectation in the first place of how it would do. But I will say it's kind of interesting, to put a nicer word on it, that it's done so well, and that's given markets a lot of support. So we've seen some good earnings from companies, particularly to start this year, and a lot of interesting things. So right now, the portfolios are actually all up this year, which we're really excited about. And they're, if they could keep on this pace, they would do almost as well as last year. We'll see if that can actually happen. It's only February, but the
Fingers
reality is that
crossed.
we're feeling okay right now, I would say, Kerry. So the prediction is not to make your prediction, but I am smiling, so I'll just leave it there. Maybe that's probably the
That's what
best
I
way.
love to see that smile on your face.
Thank you.
Can you share a little bit about how our earnings compare to other endowments or community foundations across the nation?
Yeah. So we think about the endowment predominantly in that regard, because that's the data we have on other endowments and foundations, community foundations. And we're really actually excited about last year's results. They were well into the top 25% of all endowments and foundations in the country, which I think is a testament to two things. One is the strategy itself being well thought through and appropriate and disciplined. The second is, and I really have to, pat your investment committee on the back. 2022 was a very challenging year in many regards, and the foundation was not spared a lot of that challenge. And a lot of investors and investment committees, not yours, tend to react in an unhealthy way to that, and yours did exactly the opposite. They reacted in
Mm.
exactly the right way, and I think that directly led to the outcomes we saw last year. And if you go out to the longer periods, because you mentioned long-term philanthropic impact, and that's our primary focus, as it is yours. And the those results are also either top 25% or right underneath the top 25, like top third of all endowments and foundations in the country. So, we always want to do even better, but we're really pleased with the results that have been earned compared to peer institutions.
Excellent. Yeah, thank you. So each quarter, the foundation produces financial statements for our fund holders, and fund holders can clearly see, their beginning and their ending balances for the quarter, as well as contributions they've made to their fund, any grants that they've distributed out from their funds, and of course support fees that are charged by the foundation. So I wonder if you could answer and kind of address the investments part of the fund statement.
Yeah. So that's our bread and butter, right? That's what the investment committee and Crucial spend so much time thinking about, which is how do we make those numbers positive and large as much as humanly possible. So every time a fund holder sees a statement, I hope they like that. Most of the time, hope they look and say, "Oh, that's really nice. That's a nice lot of set of earnings," and that's what we're really focused on. So those earnings are, I mentioned returns before, the 16% or so. So that's what that line is on a quarterly basis, which is what is your, as a fund holder, what is your dollar allocation of the overall pool's earnings for that particular quarter. And that's the number you're looking at there. Now, it includes dividends and interest. It includes realized gains and unrealized gains in the portfolio, or losses when markets are down. So those things all come together to form what we call the total investment gain. And that total investment gain is what fund holders see as that line that you just asked about, Kerry, on the statements. So it's really important. It is the thing that we are seeking to continue to deliver in order to sustain, again, the value of these dollars, so fund holders can continue to do the fantastic things they do in your community, and those dollars really are what hopefully add to that capacity.
Excellent. Thank you. We get asked a lot about how we handle volatility in the markets. Can you elaborate on that a bit?
Yeah, I'm smiling because volatility is a pretty scary word. I don't really know anybody, including me, who thinks it's fun to go through volatile periods. But I will say, I want to think back again. It's good to have some experience, because what you learn is the volatility is a
Mhm.
massive, massive gift to long-term investors. Because what happens in a volatile time is people's time horizon gets shorter and shorter and shorter, because they really, really get focused on what's right in front of their faces at that moment, and they get sometimes a little more fearful. Other investors, and what that creates is sometimes it creates panic selling. It creates all kinds of things that create opportunities for long-term patient investors like the foundation. So, we don't enjoy those periods of volatility, but what we usually enjoy, like we saw in 2023, is how we can, again, by being patient, being disciplined, we can literally just, do what we always do, sit back and get actually bigger than average gains because of that volatility. So it's hard to remember that when it's happening, but it literally is, it's like gravity. It always happens. You get volatility, you get a recovery. And usually the way the portfolios are built at the foundation, we get even more than our share of the gains in those recoveries. And so it's pretty, like, I don't want to say it's good, but we know we can't change it. It's going to happen. So we might as well benefit from it.
Absolutely. Thank you. And we share our an investment overview with fund holders. It's on our website, and there's a lot of information there, not only about uh, the quarter before, but also just the market in general and how funds are invested. So just another plug for um, checking out some of those details that we offer. The last question that I have, at least for today, has to do with sustainable investing. Some folks know as ESG, which is, of course, environmental, social, and governance factors. What can fund holders expect to hear about that in the future?
Yeah. So this is a really, really interesting topic. And it's funny for us because ESG, and it means different things to different people. And we're certainly
Mhm.
not deciding, we're not saying we have the definition. But what's interesting about it is at its core, ESG is a risk assessment framework. And
Okay.
so, and it's very useful though, because firstly, I think any good investor should be assessing the risks of, good or bad environmental practices, good or bad social practices, and good or bad corporate governance, because those things do affect businesses and they do affect their profitability. So the way the foundation and crucial together are is really from the lens of developing tools to measure where we have risks in the portfolio, where we have opportunities as well in the portfolio. And Crucial just finished. We're literally rolling it out as we speak. A new assessment engine, which gives our team at Crucial really detailed quantitative insights by stock into every single holding in the foundation's portfolio. And then what we can do is go out and ask managers questions about those with kind of a toolkit we didn't have before, not in this kind of discipline at least. And that lets us do a better job advising you and your investment committee on whether managers are being thoughtful, not just about sustainability and ESG, but just about everything. Because once you start opening that Pandora's box a little bit and saying, what do you think about governance? Or what do you think about this? You get even more information than we would have had before. So it's really, really helpful to the overall understanding we have. And the other thing, which I think is really important, I think it'll be a really significant and interesting part of the foundation's strategy and how fund holders feel about the foundation's activity in this area is we also think about, a lot of times ESG is, I don't want to own this, or this isn't aligned with my values, and that's absolutely fine. But we think maybe we should be able to go a step further, which is to say, can we have, just like the foundation does in all of its other work, can we have an impact? Can we change
Mhm.
something for the better? Can we make companies treat people better? Can we make companies have better governance? And the answer is we don't know for sure, but we do know one thing, which is that if we have this information, we have these dialogues with people, we have engagement, and that engagement can be really useful. So I think what fund holders should expect is more data from us and some of those reports on, what the foundation looks like from these factors, and also more the quote unquote, I call them, I don't mean this in a pejorative way, but the stories about how the foundation through its capital has had impact on companies, sometimes very positively. And I will say the last thing, because I know another thing that kind of gets into the lexicon here in the discussion is a bit of a debate about whether these focusing on these areas lowers returns. Just like a lot of things we do at the foundation portfolio, everything we do has only one purpose, which is to increase returns. So I would like to just have fund holders understand that we do not think there's a trade-off here, that we can, measure these factors, we can challenge people on how they're thinking about them, make sure they're thinking about them robustly, and we can use that not just to feel good about what we're doing, but to really feel good about what we're doing, which is to actually increase the foundation's returns as we go forward and have this be part of the toolkit. So it's a big topic and there's a lot to talk about. And I'm sure that'll be the topic of many other questions down the road, but I'll stop there in the interest of time.
That's great. We look forward to hearing more, and we'll be sharing more as the weeks and the years go by. So, Mike, thank you so much for being here today. We really appreciate your expertise, and I encourage those of you that are listening to this. If you have additional questions, you need more information, please reach out to the philanthropy team at the foundation, and we can connect with Mike and get any answers we can and get them to you as soon as possible. So we're here to help, and we appreciate your attention and your time in listening to us and this special presentation of our investment overview. Thank you so much.
Thanks, Kerry.